This is my market recap of 2/25/2025. I have my buys on today. Let's go over it. Get straight into it. Right. Higher time frame. We had a to me it looked like to be a higher time frame retracement because of the fourth week of the month. But you gotta keep in mind the third week was the retracement to the fourth week is gonna be expansion, right? And we had a weekly series to the upside. So what led me to take a short before we go why our boss is wrong, go over why we're looking for a short. To me, I thought the fourth week should have been retracement. Fourth week, in my market forecast, it has to be an expansion because the third week was I'm saying a retracement, but I thought it was a big range. But you guys could know, market will market can't do two retracement phases at once, right? It has to go to retracement and eventually expand somewhere up or down, right? So we had a weekly change to the downside, another weekly CRT. We had a daily shift to the downside, daily ERL to IRL. We had a daily, another day to the downside as well. Let's go to the 4-hour time frame. 4 hour, we had a range high got purchased. We're in a premium area, so we sold in premium. So we want to sell in premium, we want to buy in discount. Market purchase at a low, purchase at a high. This is premium to the discount. Market at the premium area, so generally became the daily range low. We had a range high got purchased. We went to range low. We had a bullish order flow, which is which went against us. We had a New York reversal profile one. If I'm bullish, I want the London to make the high of the day, not the low of the day, which in this case, it made the high of the day. Low of the day. So I'm looking for a New York reversal profile 1 a.m. accumulation, 5 in middle position, and 9 in expansion. So that's why it led us to taking this trade. It was enough narrative, and I took a short right over here. Literally, spreads was a 10 pip different spread. My execution was all over here. Market made me enter all over here, right? It's pretty crazy. From now on, I'm not going to be doing any limit orders. I'm going to be primarily focusing on live execution orders because, man, those spreads are crazy, man. And that's that. That's I took a trade, hit stop loss. I was like, okay, gonna hit stop loss because right when I saw this, this looked to be an expansion, retracement expansion. Right when I saw this bullish candle, I was like, yeah, it's gonna be an expansion candle. I'm gonna get stopped out, right? But beforehand, I focused on building good habits. I'm not gonna take another trade. This is it, right? The reason I'm not gonna take another trade is simply because I took one trade per session, right, already. And I built good habits. I followed my rules. My rules is to get in. It's just that my technical analysis was wrong. Now let's go over why my boss was wrong. We go back to the higher time frame. We had a weekly CRT to the upside, right? You guys know the first CRT should be hitting take profit first before going to the other CRT. Same thing as Bitcoin, right? Go to Bitcoin right now. Currently, this CRT has to work out first before this CRT, right? You can see we're on CRT right over here. This CRT has to work out first before we can use this other CRT. So that's the reason, right? And as well, keep in mind, we're in the fourth week of the month, right? So fourth week is going to be expansion. Why? Usually it's supposed to be a retracement. This case going to be expansion. The reason it can be expansion because the third week was a retracement. So accumulation, expansion, retracement, another expansion to the upside. That's why I'm about to the upside. We had a Monday range model, which is a Monday CRT, Tuesday super the Monday low. You can see in this case, we're at simply the version of the correlated pair, which is GU and DXY. GU and DXY took out the low, while the EU did not. So we had a simply the version of the correlated pair to the upside. And what was the confirmation for this S&P divergence was basically this Model 1 CIZ right over here, which on this day you specifically on until like 6 a.m. you would not know if there's an S&P confirmation. But you have to wait for the hourly candle to close above this CISD. But that happened right there. So that was that. And right now, what I'm looking at is supposed to be a near continuation. I would have not traded anywhere between 6 a.m. or have not traded at 6 a.m. or 7 a.m. I would only trade from 8 a.m. for a near continuation, right? So for a long side, we had an S&P divergence. We had a daily CRT. So we had a range here, so we don't want to buy ourselves within the range. We can only execute was a range low, range high gets purged, or S&P divergence. We got SMT right over here for a correlated pair. Eventually, we have enough confirmation for us to go for a long entry here. You can see we have a daily ERL to IRL. That daily ERL to IRL, we disregarded it simply because, you guys know this is we rely more on CRT rather than ER to IR, right? You could see right here, we did have a daily to the downside, right? But you got to keep in mind, we're the fourth week, right? So weekly is bullish, daily is bullish. We had daily SMT to the downside. So this daily SMT is bullish as well to the weekly, which is supposed to be pushing up rather than down, right? As well as you can see right over here, we had a right now currently where the market still has not hit the 9 a.m. mark right now, but it looks like to be a New York continuation here. And you can see right over here, if I'm bullish, I want the London session or exit session to make the low of the day, not the high of the day. In this case, he made the low of the day, so I'm looking for a New York continuation. And we had a bullish order flow. We recently, you see, market close above this, rejection below, broke above the high, rejection below the low, broke above the high, rejection below the low, broke above the high, rejection, there was no rejection here, but you can see broke above the highs here, right? So we had a bullish order flow. That was enough context for it to look for a long. To me, I saw way more bearish to the downside to the upside, but I forgot that the fourth week, because last month we had the fourth week. That's why I was going out of this. So the last month, the fourth week was a retracement, but guess what? Because the third week was an expansion, so it would have made sense for the fourth week to be a retracement. In this case, the third week was a retracement, so the fourth week is going to be expansion. That's the only reason why we had a wrong bias here. Fantastic. I'm happy. I'm satisfied. Followed my rules. It's just technical analysis. We're gonna fix it up, right? It's just the S&P divergence. I'm very unaware of it. But from now on, I'm going to be using S&P divergence as well in a higher time frame on a daily and weekly. So yeah, from now on, I'm going to be using S&P divergence as well, because I usually always ditch S&P divergence because I don't know how it works. I do know how it works. It's just that I see so many falls S&P divergence, because last week you see right on this day there was S&P divergence with a call it a pair. Eventually market still went up here, right? So I was like, I don't like S&P divergence, but guess what? The reason this S&P divergence failed, to the downside, because the weekly started to the upside, right? And the reason this S&P divergence worked out because the weekly started to the upside, right? So that's why it makes sense. So from now on, I will be using S&P divergence as well in a daily time frame, in the weekly as well. So yeah, thank you for watching. See you guys later. Peace out.